Hi there, I'm Debo Ajayi, popularly known as The Strategist. Welcome to the Business Toolkit for SMEs. The Business Toolkit for SMEs is basically where I talk to business owners, share little tips and nuggets as to how to grow that business into the successful, profitable enterprise that you require to be. Just a little bit about myself. I currently run a number of companies across Nigeria, Kenya, and Canada. And these are companies that span across the payment space, the fintech space, the consulting space, the travel and hospitality space as well. So rest assured you're in good company. Join me as I take you on what we're talking about in today's class. In today's class, we will be talking about strategy. Strategy is where everything ties together and one of the singular most important functions that guarantees and helps to foster growth in your business. Strategy is something that you must have applied, it is something you must understand, and it's something that you must continually utilize to ensure that you stay ahead of your competition, you maintain your market edge, you maintain your market share, and you're growing your revenues and profitability on an increased and sustainable basis. So join me to this class as we talk about strategy. When you think about strategy, what comes to mind? Let's look at addressing what strategy is and what role it plays in your business. Now, there is a famous Harvard professor named Kenneth Andrews, a famous strategist who had a book in about 1971 called The Concept of Corporate Strategy. And Kenneth Andrews defined strategy as this. It's a bit of an interesting definition, but it is one that I like to use when I'm talking about strategy from a foundational and functional point of view. Strategy is the pattern of decisions in a company, right, that determines and reveals its objectives, its purposes, or its goals. Strategy also, according to Kenneth Andrews, produces the principal policies and plans for achieving those goals. Strategy helps to define the range of business that the company is to pursue and to get itself involved in. So from this definition, you can see how we're touching on foundational and functional areas as regarding strategy. Kenneth Andrews also went on to say that strategy also looks at the kind of economic and human organization your company intends to be, the nature of economic and non-economic contribution it intends to make to its shareholders, its employees, its customers, and communities. So let's highlight some key pieces of his definition here. We start with this idea of the strategic mission. Strategic mission speaks to a firm's value, its purpose, its scope of operation. When you're thinking of this, you're basically asking, how do we define the business? And how do we express its aspirations? Then we go on to creating a strategic plan. So the strategic plan is the way in which the organization seeks to achieve its strategic mission. So here we look at questions like, how does the firm position itself in its markets? How does it leverage its internal resources and capabilities to accomplish its strategic mission? Last but not least, we go on now to look at what we call the strategic action. And really, like I like to say when I talk with business owners, action is where the rubber really hits the road. So actions, execution. What sort of actions have been outlined to fulfill the mission you have laid out and execute on the plan you've created? This could include things like a merger and acquisition, perhaps innovating a new product line, or developing a robust supply chain. These three things, when brought together, begin to give us a picture of what an organization's strategy is, and it speaks to the three fundamental questions every strategist must ask, right? 1, values. 2, opportunities, and 3, capabilities. Values speak to the mission and objectives of an organization. Opportunities speak to the external environment in which that organization operates. So basically, when you think about opportunities, you're speaking to things such as what does the market value? What does the market demand? Are there others out in the space providing value in similar ways? And here you begin to understand the competitive effects in your industry. Consider the following example, Kodak, a very popular company just a few number of years ago. Now, for nearly 100 years, Kodak was one of the leading companies in the world. Producers of film, pioneers in film, they had both capabilities and values and a mission statements that allowed them to be highly successful. But the world changed, and as you might guess, with the advent of digital technology, Kodak declared bankruptcy a number of years back. Now, what happened? Well, the opportunity set simply changed for them ultimately. So while they had a wonderful organization, they had great capabilities, they had a wonderful mission, they had values, they had also been in existence for a number of years, generating high numbers in revenue and profit. At the end of the day, opportunities were not available to them, at least in the way they had historically defined their business. So this is crucial and critical to understand. Then we look at capabilities. And this is where we take a more internal focus on your organization. So what does the company do well? Are the questions here. What are the capabilities this company possesses? What assets might your company have that you can leverage to meet market opportunities? There are a few things you might want to think about here. In particular, the idea of competitive advantage. Now, competitive advantage is a term you hear bandied about in popular business press all the time. But it really has a specific meaning that we need to be clear about, which is competitive advantage is always relative to your competition. It is not sufficient to just be good at something or even to be great at something if everyone else is great as well. So if you have a high quality product, but everyone else in the market has a high quality product, that's not a competitive advantage. So we really need to be interested in understanding those distinctive things that a firm does that differentiate it from its peers. Taking together values, opportunities, and capabilities, these three things helps us to define what we call the strategist challenge. And the three main questions that every business owner, everybody in charge of business development and strategy for an organization needs to ask. Because it is at the intersection of these three questions that reveals what we in strategic parlance call valuable competitive position. Those positions within a market that an organization can take that will allow them to survive and thrive and create the most value for its stakeholders. Taking advantage of opportunities requires building the capabilities that will enable you. So we need to take a closer look at those things, right? Capabilities refers to an organization's existing and potential strengths. I said a little bit about this earlier. Now, the question is, how do you build effective and strategic capabilities? The first thing you need to do in doing this is define your value chain. The question is, how do you deliver value? What capabilities does your organization currently possess? And really, what makes them distinctive? The second question you must ask is, you must assess the degree of alignment within your company. Do your capabilities complement on one another? Are your capabilities aligned with your external value proposition? This is crucial to break down. Then number three, you must identify your competitive advantage. Are these capabilities unique? Do they provide the basis for a competitive advantage, or are they easily imitated by others? The fourth thing you must check here is you must analyze what we call your sustainability. Are your capabilities durable over time? What capabilities does the organization need to possess in the future? How can you develop them? These are crucial to break down and understand. Now, next you want to look at integrating your insights. These three factors converge in the organization's competitive position, where value for an organization's stakeholders is created and sustained. So ultimately, developing effective business strategy is an integrative exercise. It involves looking through a wide lens at the organization, whereas the functional areas of an organization, finance, marketing, accounting, operations, human resources, often bring specific paradigmatic views to bear on organizational problems and considerations. So business strategy really is about how all the underlying insights of these disciplines are brought together. Now, managers do not typically encounter challenges as isolated, atomistic problems with narrow disciplinary implications. No, rather, they must navigate issues that encompass a whole range of complex cross-disciplinary considerations, right? So business strategy is also integrated because its success involves value creation for investors, for employees, for customers, for suppliers, and support communities. So commonly invoked business axioms like we must maximize shareholder returns can be useful to the extent that such shorthand phrases imply value creation for investors by way of creating value for all key stakeholders. That is, creating goods customers want, work environments that energize employee contributions, and so forth. So maximizing shareholder value is not a strategic direction, nor is it exogenous to creating value for customers, employees, or communities. Strategy involves putting these considerations together to align stakeholder interests and create value in an integrative and sustainable manner. And this is important to understand, right? So you use an integrative enterprise perspective to think clearly and to exercise sound judgments that create long-lasting value for your organization. When successfully implemented, the reality is an effective business strategy can help an organization fully realize its potential. And that's the great thing about strategy. There are some strategic tools every organization should employ. We call it strategy maps. What is a strategy map? A strategy map is a tool for visually displaying the position a company or a line of business relative to competitors. Strategy maps generally place firms based on 2 or 3 dimensions that capture either critical elements driving consumer preferences or important attributes characterizing competition. So strategy maps are useful visual tools to quickly communicate a large amount of information on a collection of firms. So arguably, there are 4 main ways a firm can position itself within a market, defined by the source of competitive advantage a firm pursues and the firm's competitive scope within an industry. These 4 ways are cost, leadership, focus, low cost, differentiation, and niche. In general, there are 2 types of competitive advantage a firm can pursue: low cost or uniqueness. Now, using a low cost strategy, a firm simply tries to have lower costs than the marginal producer in the industry, right? So with the uniqueness strategy, a firm tries to persuade customers to pay more. Please note that. A uniqueness strategy usually entails offering products of higher quality or with more features than other products in the marketplace. Firms may choose to target a broader or narrower segment of the market. Broad scope firms tend to deliver products and services that appeal to a wide number of these segments, right? Now, they may do so by offering individual products and services with broad appeal, or by offering a portfolio of products that cover the product space. On the opposite end of the spectrum are narrow strategies that target one or a few market segments. Now, these 2 dimensions, broad versus narrow and low cost versus unique, define 4 generic strategies you can apply strategically speaking, right? 1 is broad scope, 2 is low cost. Now, low cost players are referred to as cost leaders. So please note that. Now, businesses like ShopRite, like Naivas, like Walmart are classic examples of companies trying to appeal to a wide audience with the lowest cost products. Cost leaders typically engage in aggressive cost cutting, build market share to gain economies of scale, use low-cost inputs and labor, minimize overhead such as R&D, and invest in low-cost, state-of-the-art operations and continuous improvement initiatives. Broad scope unique players are referred to as differentiated players. Differentiators often invest heavily in advertising to build brand awareness, develop innovative capabilities to stay on the cutting edge, and invest heavily in human resources and other ancillary activities. On the narrow side, we have both focused low-cost players and differentiated niche players. Some firms pursue generic strategies that cross these boundaries. A classic example is Toyota. Now, Toyota is a company that has simultaneously attempted to be both low-cost and high quality, that is unique. Some argue that firms do so, pursue this multiple scope strategy at their own risk. However, often these firms get stuck in the middle, being neither the lowest cost player or all that's differentiated in the market. And again, Toyota, classic example of this. So listen, just because your company is successful doesn't mean you can rest on your laurels. Taking a proactive approach to remain successful in the future requires foresight, recognition of changes in the marketplace, and effective analysis of the competition. So you must ensure to continually reinvent the wheel, to continually innovate on your product and your services, to continually gather information that helps you to pursue and apply effective strategies in delivering the mandate of maximizing value for all your shareholders and your stakeholders, ensuring increased revenues, increased profitability, and most importantly, ensuring that these increases happen at a sustainable rate. So you're not just profitable in your first 6 months, in your first 5 years, in your first 8 years. You want that business to be relevant in 10 years, 20 years, 30 years. And these are some tools and keys that will help you achieve that. Thank you for being a part of the Business Toolkit for SMEs today. Please endeavor to like, share, subscribe. Someone in your community definitely needs this. Catch you on the other side.